Pete, why don't you tell us a story of what the heck happened last night in Japanese yen? Because I checked the market around the open. Dollar opened higher last night, and then dollar really hit the yen pretty good until what time is this? This is until like what 8, 9 o'clock, and then dollar gave back pretty much everything going into now. We're entering the U.S. session here on Monday in the U.S. The U.S. markets haven't opened yet,
right?
But yen gets killed all the way up to close to 154 and then gives it all back. What's going on?
So I'll give you the macro babble piece.
Okay.
And again, and this is why we don't trade necessarily. We listen, and it's part of the context, but we don't make a story. So over the weekend, the Japanese ruling party and the new prime minister lost a pure majority in the lower chamber of the
Japanese government.
The Japanese government. So he's going to have to form a coalition. And that means some of the things he wanted to do, he may not be able to do. So long story short, they think Japanese rates aren't going to change. They're not going to continue to hike.
So what was the party that did
LDP.
Did win?
Who won? I'm not sure who won, but I know the LDP, which is the party in other words, what slant was the party that got more seats?
Yeah.
I'm not quite sure.
But they're seemingly more dovish than on monetary policy than the majority was going into it.
Yes. And they feel that the uncertainty will cause the Bank of Japan, which like the Fed is supposed to be its own separate entity, not driven by politics.
Not voted
but
on,
so
right?
We saw that. And then we also saw on the U.S. opening, U.S. bonds they closed a little weak on Friday, like the long bond CB at 118. Looks like they were going to open a little higher, 118.08. And then on the opening, they opened up at 117.28 and traded right down to 117 even.
Wow, okay.
In 5 seconds, which speaks to either somebody fat-fingered something, put in a big order, or they put it in an order that was large enough to trigger stops, because at 118 level. So a big spike up in U.S. rates. Markets then Sunday night. The Japanese equity markets on this news of the political news, remember the Nikkei, their stock has been on a tear.
Yeah.
Huge tear. We're up a lot. They're up even more. That got slammed on the opening. And, of course, buyers came in, and the minute it started to rally, so this upswing up to 154 was the Japanese markets coming in about 8 o'clock at night, Nikkei opening appreciably lower.
Oh, this is on the Tokyo Open.
The Tokyo Open.
Okay.
And, again, selling of yen because the Nikkei's getting hit so hard. Well, buyers emerged, and the spike down in U.S. Treasuries normalized a little bit. They're back to unchanged.
Of course.
So,
did the Nikkei get back to unch by the end of the day there? Wow.
And that's why we're seeing dollar yen kind of revert. And also, when you look at this chart, you see, where was that pain point? We went all the way from, remember, post-carry trade debacle in the 130s to, we got a scopes below 140, 139.80, I think. This 153 level is kind of held in the short term. So we got through a level that it held. We had some movement overnight, geopolitical. Again, if you traded that, it would have been difficult to figure out what you wanted to do, and you probably wouldn't have done the right thing because, the government's not going to do anything on rates. Yen should be a lot higher. Now, it moved higher, but it's given it all back.
Yeah.
So, and I think when you look at the move we've had here from 140 to 154 in the matter of 20 trading days, it's almost a 10% move in FX. Now, currencies on average, when you add them all together, the majors, on average over the last 20 years, move a little under 3% a year. Some years they move more, some years they move less. We know last year, yen had a huge move. And I think this was we got all the news out of the way. We're going to take some profits. So are they off the highs? Yeah, we're off the highs a full 100 pips.
Yeah.
We're still near the higher end of the range. You'll be interested to see how that shakes out. And we've got a week with a lot of U.S. data coming out. Bank of Japan meets this week, and ending the week with non-farm payrolls. So it'll be interesting to see, are we on the freight train back to 160, or is this run a little bit of enough? I think the correction later half of the day, trading down 154 back into the high 152s, is just that. What that gave you was, if you had been bullish dollar yen, it gave you a great level to take some profits.
Sure.
if you wanted to play the contrarian, you could do the same thing. And Glenn and I had run through the one standard deviation scalping range last week. And
let me guess, for dollar yen.
Yeah.
I would guess it's over 100 pips.
It's 90, I want to say it was either 93 or 97
Okay,
pips.
so just under. Okay.
So we got, last night's tape action got you right about to that one standard deviation level.
Oh, it got you through it for sure.
It did. Now, it's never, again, that's not a rock solid, oh my God, if it gets there, it's great. If it goes one pip through it, it's no good. Again, markets are efficient. But if it gets to that level and you want to play the contrarian,
it's interesting.
It's a reasonable level, and it gave you that. So,
well, a couple of things, because the market goes out on Friday around 152.30.
Right.
Well, let's just call it 152 and a quarter. It doesn't really matter. It opens about one standard deviation higher, almost 100 pips higher. There's a little bit of shakeout around there, and then, like you say, the Japanese equity session comes in. They start hammering Japanese equities, and this yen moves up above 100. The 100 pip mark, the one standard deviation mark, is right here. And so a couple of things. One, first and foremost, I appreciate all the background because I don't read any of this news. I have no clue what's going on ever. But I did see this last night, and I was like, what the heck is going on? They must, to me, I didn't know there was election going on, anything. Yeah. I was just like, oh, they must be taking this yen out and seeing how far they can.
And that's part of it too. Who's stressed right now? The guys who are short dollar yen.
Well, and so the first point being that, like, if you're day trading or even like swing trading within, a 24 to 48 hour time horizon, and you're following news like elections, that's going to be a tough strategy, man. Because like the whole move last night is the same as the Trump election, the same as the Biden election.
Absolutely.
All of these elections where it's like, yeah, there's volatility the week of or as the news comes out, but the market has a really hard time of pricing in what the next several years of this new political landscape is going to be. So one, first and foremost, it's tough to try to make money intraday or day to day with decisions being based on what you think, what you translate the new news item coming out as being, and this market shows you that. But more practically, if you are using statistics, technical indicators, these different things to trade around these events, because this is volatility. What we know for a fact, we have no clue what these events are going to do to price.
That's all I want.
But they do induce volatility. When Trump was elected, SPOOs got hit for what, 100? Limit down, and then they were unged by the next U.S. trading session, which again, there's no guarantee of that ever happening. Because here's the other thing. You're totally right. It was interesting now to be a contrarian and say, okay, this market, here's the one standard deviation mark. It got, 20 pips, 30 pips, 40 pips outside of that one standard deviation move. And yeah, if I sold anything in here, it'd be good now. But right around here, this is a tough time.
Roll that away. Can you?
What, you want me to put more time in?
No, basically take the time out so we're right at the 153.30 level.
Here, hold on. What, right up here?
Right. So now here's a case where, again, this is why we say 68% of the time. We know we're wrong 32% of the time. We're just looking for tradable ranges. This is a textbook example of it didn't work. It opened there. It held around 97, 98 basis points higher. Net change on the day. It gave you an, but once it got through it, then it's up to you to determine what are your mechanics around this. This was one where, okay, it's an interesting range. It's now through that range.
Yeah.
I know it can be through that range 32% of the time. Long-term statistically, you would have managed.
Yeah.
It doesn't mean like, well, I'll let it run 40, 50 points against me because I know it's going to come back to the...
Sure.
No, it's a tool. It's just a tool of statistics. And this was an example where that strategy would not have paid you.
And on the flip side of things, well, exactly right, because on the flip side of things,
because when you look at this and take away all that, it came back. No, when it was printing up at 153, 40, 50, you didn't know what the next spot was going to be.
Yeah, this is a pretty violent move here. And on the flip side of things, if you followed the trend into this, if you said, okay, I see the volatility here pre-Tokyo open, but as forex and futures are opening before everybody starts trading for the week officially, and then you say to yourself, oh, I'm a trend follower, I'm not a contrarian, I'm going to actually buy this little dip because I think they will run through that 1 standard deviation. You had plenty of opportunities to take profits on a successful trade here. So yeah, I don't want to paint it in just one light. That's what you and I usually look at, more the contrarian view. But to your point, Pete, if you do have those mechanics of, okay, it would have worked out if you were a trend follower here, pretty much you wouldn't have been challenged to take a loss unless you got too greedy and didn't take any profits anywhere up here. But if you are a contrarian, and let's say the 1 standard deviation, let's just call it 100 pips, and so this would be the 1 standard deviation move on dollar yen right now, and you sold this either on this bar or on this bar or on this bar, and then you gave yourself, let's say, 20 pips of room on either side, you would have gotten tapped here and would have taken a loss.
Right.
But that allows you to maybe put this on another 20 pips away when it gets up to 153.60, 153.70. Now, of course, these are all examples. This isn't the strategy that you or anybody out there.
We're not recommending anything, but it's, again, you would have gotten tagged on this one, but you would have made all those decisions ahead of time, and that's what we talk a lot about. Is, you know what, these tools, these opportunities of movement, we're going to make decisions of, okay, if I like using a 1 standard deviation range statistically, that's my edge in a static delta 1, a static delta product, which means just an underlying with no premium attached to it. It's one of a number of different tools you can use. You take the loss, you're back in the game.
Yeah,
and you make those decisions ahead of time. So it'll be interesting to see. I think this is going to be a good trading week. As we ramp up to the elections, things will get a little bit more elastic. I think we'll see a little bit more.
Maybe maybe a little bit of volume come out of the market, but some volatility go into it. Yeah.
And as traders, trading with a capitally efficient product, again, product with leverage, we know leverage is capital efficiency. It also exposes us to greater wins, greater losses. We need to keep that in mind. But volatility is taking that capital efficiency and putting it to work.
Cool, man.
All right.
That'll do it here for
Great to be back with
Monday.
You, my friend.
Yeah, glad to have you back. Interesting story. We'll see how it develops. And yeah, plenty of data throughout the week.